This is how I do my moving average trading. Um, Start off with what I plot on the chart. I'll put a 64 exponential moving average, a 32 exponential moving average, and a 16 simple moving average. And what I'm looking for is reactions to the 32 and the 64 moving average. I will not enter a trade if it only reacts to the 16 moving average. When I'm looking for a pick, about 99% of the time I'm looking at the for a play off the Dow Jones Industrials chart. Every once in a very great while I'll look at the S&P 500, but like I said, about 99% of the time I look at the Dow. And there's two kinds of trades I'm looking for. I'm either looking to jump in on a new trend, or I'm looking to continue a trend. I'm looking to jump in on a new trend. I'm looking at something like back in here, where we had a nice transition from up to down, and we also had a pullback to either the 32 or the 64. In this case, it was the 64 moving average, and we had stacked at least a couple bars, about 3 in here, and then another 2 over here. So we actually reacted to it twice. And this is where this would have triggered a short entry, but I don't totally base my decision off that alone. I'll also, like in this case, I'll also look at like a daily and a 10-minute chart to see if, using my experience to see if I think it'll keep going or if it would flatten out. At this particular time, I figured he was going to continue the trend, so I decided to enter in on a short. But if I had thought he was going to go flat, looking at those larger time frames, I would not have traded him. And then obviously, if I thought he was going to go the other way, I wouldn't have traded him. But that's for when I'm looking for the beginning of new trends. Now, when I'm looking to continue a trend, I'm looking for, we had a nice trend here, downward. Then we had a nice pullback, and I kind of thought about jumping in here. But the reason why I didn't is because we didn't really react to the 32 moving average like I would want to, like how back that last example I showed you how we reacted to the 64. That's the kind of reaction I like to see even on the 32 moving average. And we didn't touch it, so I didn't enter in on a short here. I had waited for this to happen over here. Okay, so we had a nice downtrend, pullback, and then we reacted to the 64. I allowed some bars to stack up on here. I didn't jump in right away. And then looking at other time frames and using my experience, that confirmed that it was going to continue to go down. So this is where I would have entered on a short. Now when I'm making these plays, I use ETFs. When I'm playing the Dow, I use DDM to long it, and I use SDS to short it. The reason why I use SDS, which is the ultra short S&P 500 ETF, is because even though it's for the S&P 500, it still reacts mostly to the Dow, and it's got a way better profit potential than the DOG, which is the ultra short Dow. So yeah, I use SDS, and how I do it is, in this case where I went short here, I would go to the SDS, and my entry on it was in here. Okay, and when I enter these, how I place my stop out is I only do it based off of the ETF chart. I won't look at the Dow chart for my stop out, so I only look at the ETF. So in this case, I tend to look for the next resistance or support levels. Here, let me back this up here so we can get a little better example here. There we go. Entered in somewhere around there. Okay, so I would enter in here on a long, and what I like to do is I place my stop out below or above the 64 moving average, whichever I end up doing. So in this case, it was a long, so it was below the 64, and I like to do either the first or second support or resistance level below or above the 64. In this case, we had a level here at 95 and a level at about 94.50. I decided to go with yesterday's close here, this blue line. That way, in case we got a decent spike, we could I still had a chance of it running up. And then as the trade goes on, what I do is I trail my stop. So in this case, after we came down and we pulled back to the 64 and then bounced off again, I tightened my stop out to just below $95. And then the further we go, now that we broke out here and we had a decent up bar, I was looking, I started actually getting more aggressive with my trailing stop because of the fact that we had gone flat for a little while in here. We didn't really break out, and I was having my doubts we were going to reach this high. You know, I figured that might be the most we might make today. So that's why I was a little more aggressive with my stop. Once we hit this point, I tightened my stop below 96.50. It was like 96.48. And I got stopped out on that bar there for a small profit. Now this was like I said, this was a special case where, like I said, we went flat, so I decided to, be more aggressive with my trailing stop. What I prefer to see is something like this here, where we had a nice strong run down. And in this case, what I'll usually end up doing is I'll either look at different time frames and see if I think we're starting to form a peak, and if my feeling or experience tells me that we have a strong chance of making a peak, I might jump out there. But in cases like this where there's not, there wasn't really anything going on that was really telling me we were forming a peak, what I would have done is the 16 moving average as my trailing stop indicator. So say, just for example, I would have entered in here on a short. Okay, what I would have done is I would have just tightened up my trailing stop. In this case, we pulled back to the 16, then headed down, so my trailing stop would have been right around in here at like 91.82. As the day goes on, we head lower, and I would have tightened up my last trailing stop would have been here at like 90.56. In this case here, I probably would have taken my gains just because we were at the end of the day. But like I said, that's what I would have done if this wasn't the end of the day. I would have tightened up my trailing stop a little above this 16 moving average. But that's how I do my moving average trading. If you have any questions, post them in the comments section.